So up to this point, we've established the budget parameters, we've established the tax rates, we've budgeted our labor and employee benefits costs of having our personnel, and we've established our direct costs on contracts. The next screen is the accounts screen. This is for our individual indirect accounts. So when we go to this screen, we see the chart of accounts here on the left, and one thing that we have to take note of is the budget method. And notice for direct costs, those are calculated based on our very granular budgeting that we've done in the previous screens. When we get to the fringe, most of that is calculated as well because we're budgeting benefits, we're budgeting payroll taxes, and we're budgeting compensated absences. But when we get to the facilities costs, one of our indirect cost pools, everything isn't necessarily pre-calculated. We can look at any of these accounts. So let's take office supplies, for example. Our budget method can be an escalation percent, a detailed budget, or a fixed amount. The escalation percent is derived from that escalation rate that we put into the parameter screen in the first setup screen. So what's happening here is we're taking the amount that was accounted for in the base year, so we're pulling that directly from the QuickBooks database, and we're applying an escalation rate to that to determine the amount that we're budgeting in the new year. So this is, I believe, the most useful default approach. But if you have an account where you are pretty certain that the amount to be budgeted is going to be different than it would be for just applying an escalation rate, well, then you can flip over to a detailed budget where you can enter line items in, quantities, rates, and amounts, or you could just establish a fixed amount and drop that in. Now, for example, if you know that your rent is subject to a 5% escalation, or you know that you have leased additional space, applying a 2.5% escalation rate isn't necessarily going to work for you. So rather than relying on this default setting, you can come over to a more detailed budget and you could enter in amounts right from the leases. So you'll know what your space is going to be for the old lease, and you can put that in, and you can determine what the cost for new leases will be as well. So you have a lot of options with this tool, but the idea is you can rely on the default approach for the majority of your accounts, and you can target in on just those specific accounts which you know will require a more granular approach to budgeting.